Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we are talking about living benefits with life insurance. Let's face it, life insurance oftentimes gets a bad rap as just being death insurance. Why would we call it life insurance if, in fact, the only way that you access the money is when you die? And ultimately, if you look at life insurance is just death insurance, and it's really not about how it benefits you, it's how it benefits your family, because at the end of the day, whether you are able to use it or not is not relevant. It's going to help your family, and it really becomes a decision based on love, right? It becomes a decision based on, all right, if something tragic were to happen to me, if I were to meet an early demise, how is my wife, my husband, my kids, my family, how are they going to be? Are they going to be able to accomplish the goals that I want them to accomplish and that I would ultimately help them accomplish had I been here and lived a long, fulfilling, fruitful, productive life? If that's not a value of yours, if you don't really care, and sadly I've talked to people who sometimes just don't care what happens to people when they're gone. To me, that's a really sad situation. But what I look at and I think is important to understand is that there are living benefits that can be a component to your life insurance policy. So just to put it simply, let me define what living benefits are. Essentially, the only thing that living benefits mean is your ability to access benefits inside of the policy while you're alive. That's it. Now, this can come in the form of cash value access if it's a certain type of policy. It can come in the form of other styles of benefits that are notated in the policy. Now, this could be if you become critically ill, chronically ill, terminally ill. There could be long-term care riders. There could be the cash value access, as I said, in some instances. There are a lot of different ways that you can access the benefits while you're alive in your policy to help you solve different needs. I share the story all the time. My father-in-law got diagnosed with stage 4 pancreatic cancer on November 4th of 2020. They gave him 90 days to live. Because he was able to accelerate the death benefit and get access to the living benefits with the terminal diagnosis, even though the traditional oncologist gave him 90 days to live, we utilized a lot of money, accelerated from policies, to be able to help pay for alternative treatments through more natural, methodologies, more old school tradition, right? We call traditional medicine like the Western world medicine, but I look at traditional medicine as like what happened before all the technology existed. I look at the body as it has the ability of really healing itself. My father-in-law's proved it. We're now, as the day I'm filming this video is August 17th, 2024. So we're coming up on 4 years. And the gentleman who was diagnosed with stage 4 pancreatic cancer with a 7.5 centimeter tumor that spread from his pancreas to his liver, because we had the ability to accelerate the death benefit and utilize tax-free money for whatever type of treatment and, quite frankly, whatever we wanted to have done with him at that point in time, we were able to find doctors and treatments that gave him a fighting shot. To this day, he's playing golf 4 days a week still and enjoying life and being able to spend time with his family and grandkids. And my wife is actually in Arizona visiting them right now while I'm in the Dominican Republic, right? And so, like, these are the things when I look at life insurance that I think most people are not aware that you can utilize them. What is important, though, is the fact that not every life insurance policy has living benefits, and not every type of life insurance, i.e. whether it's term insurance, whole life insurance, index universal life insurance, traditional universal life insurance, variable universal life insurance, any of these things, different types of products, i.e. I'm just going to speak about whole life for instance. You could buy whole life insurance, and some companies are going to have different living benefits that they provide compared to other companies. And so it's one of the things when I always say, like, what's the proper design and what's the proper company for you to go with? It really has to do more in alignment with what are your values and beliefs, what problems are you trying to solve, what are your concerns here, now, in the future, and you got to look at all of the different variables and figure that out. And so it's one of the reasons that we work with the companies that we do, because they all solve different problems. You go with a company like Mass Mutual or Guardian, their living benefits are not that great, right? And so while their cash value and their stability as a company is great, there are other companies whose stability and history and growth and liquidity and all the different variables that we talk about for, like, the banking policies and the cash flow hacking and the infinite banking style structures, those are all important. But when we take those things into consideration, what's more important is, like, I look at if I could have a company that's going to perform similarly, but is going to provide living benefits in addition, well, there's a lot of value in that, right? Whereas these other companies might not be as good, right? So they're just things to consider. And where this really sticks out is with term insurance. Term insurance, there's a lot of term insurance that you can get that's just really cheap, but you can get some term insurance where you actually have living benefits associated with it while you're alive. Now, if you're 40 years old and you buy a 20-year term policy, you could get the cheapest of the cheap term, just to use this as an example, and you could get the 20-year cheapest of the cheap term, and the chances are it's going to be cheaper because the odds of you dying before you're 60 are low, right? Now, the chances of you needing access to the living benefits if you become chronically or terminally ill, for instance, it's much higher, right? So your chances of needing to utilize it in that 20-year period are much higher. So the cost is going to be a little bit more, but the benefit is going to be much, much higher, right? So that's important to understand when we look at the different living benefits. Now that I've given you that background, what I want to do is go into a little bit what are the different types of accelerated benefit riders on policies. So the first thing that you need to understand is that what they're doing is these accelerated benefit riders are basically an acceleration of the death benefit. So typically speaking, the first and easiest way and the most common accelerated benefit rider is if you get diagnosed with a terminal illness. If you get diagnosed with a terminal illness and let's say you get cancer or something of that cord, if you are diagnosed with anywhere between 12 and 24 months to live, typically, if you don't treat it properly, that's going to qualify you for the terminal rider on your policy, and that they're going to accelerate a portion of the death benefit and pay that to you while you're alive on a tax-free basis, right? You can then utilize that money for whatever you want, whether it's medical treatment or whether it's just taking a vacation to enjoy your life while you have it with your family, something of that nature. I've even had clients that get the death benefit while they're alive and hand it to their family and gift it to their family and get to really experience what it's like passing it on. The next ABR is what's called the chronic rider, chronic illness rider. And so basically you can access the chronic illness rider when you have different daily living activities that you're not able to perform. Typically, and this isn't the case in every situation, but typically what we see with the chronic illness rider is if you're not able to perform 2 out of 6 daily living activities like bathing, dressing, stuff, things of that nature, or you become cognitively impaired with like Alzheimer's or dementia, that's going to qualify you for a chronic rider. But once again, not every company offers the chronic rider, so you want to make sure if that's something you're concerned about that you actually look for a company that provides that benefit for you. The third one is a critical illness rider. Now, critical illness rider is going to be something, this is less common, not every company has it, first of all, but this is going to be something when you're diagnosed with maybe a less lethal cancer, with a heart attack, with a stroke, or something of that nature, then you can accelerate your death benefit when you have something, one of those things happen to you. And what you want to do is you want to look at your policy, you want to look at the illustrations that are run for you, and you want to go down to the critical care riders, see if it's there. You want to look at the chronic riders, you want to see what they're there, and you want it to actually allow you to take advantage of the acceleration of the death benefit should something like that happen to you. So a question that I get a lot of the times is, all right, it's great that these riders are on there, but how do we take advantage of them? Well, at the end of the day, it's like anything else. You're going to have to provide medical documentation. You're going to have to go to the doctor, get statements that prove the medical situations that you're going through, and then you have to file a claim with the life insurance company. It's kind of like the same thing. If you die, there's got to be a death certificate. You've got to put that file in, and there's a little bit of a process to get the death benefit, should something happen to you. But it's a pretty common process, right? Like it's a pretty streamlined process. You just get the information, you get the documentation, you submit it, you file a claim, and the insurance company will accelerate you as to the terms of your contract. The amount of money available in your contract is going to vary on a contract by contract basis. Typically what happens is, depending on the type of insurance you have, depending on the type of design of the policy that you have, you're going to be able to accelerate a portion of the death benefit. And one of the things that you're going to want to look at is, after I accelerate and take advantage of this benefit, how much death benefit do I have on the back end of it? What is going to be left as a death benefit after I take advantage of this. You can get paid your accelerated benefits, whether it's critical, chronic, or terminal. You can get paid those in monthly fashion. You can get lump sums. You can get paid semi-annually. You can kind of structure it in all these different ways. And ultimately, it's kind of like an annuity and winning the lottery. You can either get a big lump sum payment, or if you take it in smaller chunks, typically they'll give you a little bit more in doing it that way. But when we look at the impact that it's going to have on the policyholders, and we think about what are the positives and the negatives, or the benefits and the drawbacks of it all, I would say I just kind of touched on the drawback. The drawback of utilizing your accelerated death benefit riders while you're alive is the fact that it's going to reduce your death benefit, right? So my advice to people is, if living benefits are important to you and you want to have a portion of that covered, make sure you have enough life insurance that you're able to utilize some of that while you're alive, and whatever you feel like you're going to want to have access to, you'll still have enough death benefit on the back end. Now, the benefits are, to me, very, very cut and dry, straightforward. You're going to have control of the medical directive of your life. You're going to have control and never be in a situation where, should anything medically happen to you, you're going to lose your dignity, right? Like if you need assisted living, in-home care, if you run into a situation that you're medically compromised in a lot of these ways, and as long as the ways that you qualify, you're going to have the access to the money. You just want to make sure, once again, that when you access that money, if it's important for you to have that, it doesn't reduce your death benefit so much that it's going to hurt your legacy on the back. The great part about these benefits, and nothing in life is free, is the fact that they are baked into the premium, typically, the basic premium. They're not riders that you add on a per rider basis at extra costs. They are actually baked into the premium. But once again, like I said, nothing is free. That's why if you're looking at a premium that might be $100 a month for the cheapest of the cheap term, with no living benefits, maybe it's $130 or $140 a month for the term with living benefits. But you have to ask yourself, and this is what I did for myself, is it worth $40 a month extra or $30 a month extra, whatever it is? And that's all gonna have to do with what your health rating is, and you gotta go through underwriting with the insurance company to figure all that out. But would it be worth a 20 to 40% premium increase if I was able to access this money while I were alive? And to me, it's an unequivocal yes. I'm 100% down to pay a little bit more, because when you look at the cost of medical insurance, health insurance, and then you compare the cost of having this as part of your life insurance policy, to me, it's just a more efficient way to cover many of the similar risks. Now, I'm not saying it replaces it, but I know a lot of people that have high deductible catastrophic health insurance policies, that they're like, I only have this and I'm paying this $400 a month with a $10,000 deductible just in case I get cancer. Well, guess what? If you have this policy with life insurance and you're diagnosed with this cancer and a terminal cancer, now you have access to the death benefit, and we're talking pennies on the dollar, relatively speaking. So in conclusion, what I would say is, I'm a huge believer in living benefits. Living benefits have changed my family's life. My father-in-law is still around because of them. It's something that I never really touched on too much before that happened to me in 2020. But if you watch a lot of my content, you'll see that this is something that I touch on all the time now, because I think it's one of the most vital parts of the policy, and it's one of those things that doesn't matter to you until it actually happens to you, until you get impacted by it. But I promise you, if you're looking at a policy, one of the things that I think everybody owes it to themselves to do is, if you're selling life insurance, you need to be focusing on the living benefits, because it's a huge value add at a very minimal cost compared to what the alternatives are. And that's a big question in finance, is always compared to what? The living benefit costs compared to the alternatives in the market are pennies on the dollar compared to what the alternatives would be. And then if you're somebody who's looking to buy life insurance right now and you're looking to protect your family, if you're looking to protect your own life, I really encourage you to dive deeper, and you can set up a call with somebody on the Life 180 team. Go down and link in the description below, set up that call, and just get clarity on what it could look like for you. Hopefully you found value in this video. If you did, please like, share, subscribe, click the button, that way you're notified. Click the bell, I should say, that way you're notified every time I launch a new video. Hopefully you found value in this, in understanding how living benefits work. Once again, if you have any questions, reach out. Till next time, have a blessed, inspirational day. We'll talk soon. See ya.